Welcome back, everyone. Today, we're diving straight into an explainer of a true financial heavyweight, Tony Robbins' book, Money Master the Game. We're taking the complex, sometimes intimidating advice from some of the world's most brilliant financial minds, and we're breaking it all down into a clear, visual journey. It's basically a roadmap to wealth, and I'm thrilled to guide you through it. Let's just get right into it. You know, from the time we're kids, we're fed this very specific kind of outdated script about money. We're told, more money, more problems, right? Or we're taught that the stock market is basically just a giant, dangerous casino. And the only respectable path is to work grueling hours until you hit 65, and then you can finally relax. But what if that whole traditional mindset is the exact thing keeping you trapped? So here is our actual map out of that trap. We're looking at 1. Welcome to the financial jungle. 2. Shift from consumer to owner. 3. The price of your dreams. 4. Power of asset allocation. 5. Ray Dalio's All Seasons portfolio. And finally, 6. Invest like the top 0.01%. All right, step 1. Welcome to the financial jungle. Stepping into the financial world for the first time, man, it is daunting. It literally feels like hacking your way through a dense, shadowy jungle. You start making a little extra cash, and suddenly you're surrounded by confusing jargon and people eager to help you. But here's the thing. In a real jungle, a lion is obviously a threat. In the financial jungle, the predators are in nice suits. A lot of brokers, bankers, and financial advisors are just acting in their own self-interest, grabbing their fees whether you win or lose. And honestly, if we look in the mirror, our own greed or laziness often makes us our own worst enemies here. Which brings us to step 2, the shift from consumer to owner. If you actually want to survive this jungle, you have to execute a massive mindset shift. Most folks spend half their lives grinding away just to make money and the other half blowing it on things that lose value instantly, like waiting in line to buy the newest Apple phone the second it drops. The owner mindset flips that completely. It says, hey, instead of just buying the shiny new phone, why not buy the stock of the company making it? Invest your money so you actually own a piece of the profit. It's a real game changer. Now, as you start trying to own pieces of companies, you're going to run into mutual funds. They're advertised everywhere. But get this. Look at this crazy statistic. Only 4%, just 4% of actively managed mutual funds actually beat simple passive index funds over the long run. Let that sink in. That means 96% of the time, these highly paid experts completely fail to beat the market. So for the average investor, trying to outsmart the market with expensive funds, it's basically a losing game compared to just sticking with simple, low-cost index funds. Okay, moving on to step 3, the price of your dreams. If I asked you right now, what's your dream number for financial freedom, you'd probably blurt out something massive, right? Like 10 or 100 crores. But to actually escape the jungle, you need a highly realistic target. So let me anchor you with a much more grounded number, 60 lakhs. That's 6 million rupees. It sounds like a lot less than 100 crores, but it is a highly achievable corpus that can buy you very real financial security. Let's break down the math on this really quickly. Say a family lives comfortably on 30,000 rupees a month. Over a year, that's an annual expense of 3.6 lakhs. Now, if you manage to save a corpus of 60 lakhs and you pop it into a traditional fixed deposit, getting a totally safe 6% interest, that generates exactly 3.6 lakhs a year. Without even touching your original 60 lakhs, your basic expenses are completely covered. Boom, security. But there's a catch, and it's a big one: inflation. Because things get more expensive every year, an FD won't cut it forever. To actually beat inflation, you need vehicles that grow, like equities. The book really highlights investing directly in strong, dividend-paying companies. We're talking about established players. Think ITC, Castrol India, or Bajaj Auto. This essentially acts as a lifetime income plan. The dividends they pay out can cover your daily expenses, while the actual stock price ideally grows over time to fight off that inflation. Now, of course, this route definitely requires you to roll up your sleeves and do some solid research on these businesses. All of this effort builds up into 5 distinct stages of wealth. I want you to picture it like climbing a giant mountain. Stage 1 is security, generating enough passive income to cover your basic bills, which completely removes that terrifying fear of losing a job you might not even like. Once you have that, you climb to vitality. Then up to independence, where work becomes strictly optional. Then freedom. And finally, the peak. Absolute freedom, where your passive income easily covers even your wildest, grandest luxuries. Next up, step 4, power of asset allocation. So how do we mechanically build the wealth to climb that mountain? Listen, the absolute most important investment decision you will ever make is not picking one lucky stock. Nope, it's asset allocation. Almost everyone earns some money over their lifetime, but your ultimate financial destiny is entirely determined by where you put it. Are you hiding it under a mattress, leaving it in a checking account, or are you smartly allocating it across equities, bonds, and gold? Asset allocation is just the strategic division of your money to balance risk and reward. It ensures that if one bad event happens, it doesn't wipe you out entirely. Which leads us perfectly into step 5, Ray Dalio's All Seasons Portfolio. If you want to master asset allocation, why not learn from the literal best? Ray Dalio is one of the most successful hedge fund managers in history, and he actually gave Tony Robbins his personal All Seasons portfolio strategy for free. Here is the exact breakdown. He suggests putting 30% in stocks, a pretty heavy 40% in long-term bonds, 15% in short-term bonds, 7.5% in gold, and 7.5% in commodities. Why the specific mix? Because it is engineered to weather any economic storm. It's designed to give you a smooth, consistent ride, protecting your money whether the market is booming or completely crashing. Finally, step 6, invest like the top 0.01%. To truly conquer the financial jungle, we have to adopt the mindset of the world's absolute elite investors, especially when things go wrong. Think back to a market crash, like during COVID. The typical middle-class reaction is usually driven by sheer panic, hoarding groceries, selling off investments in a frenzy, and basically locking in massive losses. But the top 0.01%? They view a market crash entirely differently. To them, it's not a disaster, it's the ultimate flash sale. They use that downturn to scoop up high-quality stocks at massive discounts. Another huge difference is how these two groups view risk. The wealthy look for what's called asymmetrical risk. The middle class will often risk almost all their hard-earned money just to scrape by with a tiny 4 to 8% return, like you'd get in a standard savings account. The ultra-wealthy completely flip that. They look for investments where their downside is strictly limited, but the upside is explosive. Imagine risking just $1 to potentially make $5. That's a 400% return. They're taking highly calculated, minimal risks for massive asymmetrical rewards. Now, as we finally reach the peak of our financial mountain, we really need to take a step back and remember why we're climbing in the first place. The ultimate goal of absolute financial freedom isn't just to sit on a giant pile of cash in a bank account somewhere. It's about what that money buys. True wealth buys you incredible life experiences. It buys you free time to spend with the people you love. And, most profoundly, it gives you the resources to give back and contribute to society. And honestly, that's what ultimately brings the deepest joy and fulfillment. So, as we wrap up this explainer, I want to leave you with a real, concrete challenge. What is your exact monthly household expense right now? Seriously, don't just guess it. Sit down, calculate it, multiply that number by 12, figure out your target corpus, and take your very first step out of that financial jungle today. Thank you so much for hanging out with me for this explainer. Keep learning, keep growing, and I'll catch you in the next one.